The SRI Equity Fund is a fund that holds small ownership positions in a number of companies. It delivers a powerful combination of active management, where we're very much involved in the stocks that are held, when they're held, and the number of stocks. Also, ESG considerations, environmental, social and governance, with specific exclusions relating to certain sectors, industries and companies. The fund typically holds between 30 and 35 stocks at any given point, and the investment universe is Australasian, yet there's a limit of 20% to Australia. I believe that the SRI Equity Fund delivers competitive returns, and at the same time the ESG integration and SRI related exclusions mean that for certain clients it more closely is aligned to their personal values. SRI stands for Social Responsible Investment, so we call the fund the SRI Equity Fund, and that hasn't changed for the 20 years that we've been running it. SRI basically uses an exclusion criteria to identify certain sectors, industries and companies that should be, based on the mandate, restricted, and as a result the fund avoids that part of the investment universe. ESG, environmental, social and governance considerations, are a topic of increasing interest because it's been made clear that consideration of these actually support financial returns of the company and also will help produce better outcomes for society, essentially internalizing the many negative externalities that happen in the marketplace which aren't priced in to transactions. Companies have been getting away with it for too long. Carbon emission that the world and society bears the cost of, which should be incorporated into the price of the transaction. So that's the movement that's happening now, and these funds reflect that. The SRI Equity Fund essentially invests in stocks. These are small ownership positions, and in the portfolio we hold a number of them. We hold less than the benchmark of 50, so a relatively small number, not too diluted so that your return ends up just being an average return, but not too concentrated, not too few, that you have all your eggs in one basket. So it's important for us to build diversified portfolios that will limit the near-term risks. Exclusions are a differentiating feature of this fund. Certain sectors, industries and companies are excluded from the fund. Now we have 3 lines of defence in this regard, or investigation. First of all, our compliance team. They build rules into our investment platform that actually prevent the fund from investing in obvious sectors and industries. But some of the rules fail to restrict the more subtle exposures. In this regard, through the fundamental research process, we'll interrogate all publicly available information, such as half-year results, full-year results, annual reports, and we'll really seek to find whether these thresholds are being breached. Finally, if we're not satisfied, we will leverage our relationships that we have with companies' management and seek to clarify for certain whether the exposures are there. We look for companies that offer a blend of value, growth and sustainability. However, certain companies that operate in specific sectors, industries, we will deliberately avoid, or we will limit the exposure to those that have a below 10% threshold. So this is important because some people think it should all just be excluded, and we hold that right to do so and to avoid the stock. However, if we feel like there's a clear plan by management articulated to monitor, manage the risk, and we can help influence them in a downward trend, then we feel we can have an active role in the transition required by companies to move to an improved situation. We have a very strong team of 6 individuals working in the equity team. We take the whole investment universe, which is New Zealand stock listed companies and most Australian listed companies, and we divide that by the sectors that they represent. These sectors are then allocated to individual analysts, so even portfolio managers have research responsibility. These individuals become experts in the subject matter that they cover, and that's not just from traditional financial perspectives, but with an integrated ESG process. These individuals, we are asking the companies about their financial performance, their outlook, and questions on environment, social and governance factors, all intertwined into the same investment process that's worked for so long.